Jim Marous, coming from the nSight event in Charlotte, North Carolina. I'm here with nCino's Chief Economist, Taylor, and we're going to talk a little bit about things that I'm not nearly as familiar with as I am retail banking. I want to talk a little bit about our economic environment right now, and to say it's somewhat undecided as to what's going to happen next time. How is that impacting the banking industry? And we talked about before we got on air about the fact that the stock market seems to have elevations no matter what happens, and it doesn't get impacted that much. But as you said, it usually comes down to money to invest. How's that impacting the banking industry right now, the indecision and the turmoil, so to speak, in the marketplace overall?
Yeah, that's a good question. Banks are, as you know, banks specialize in taking deposits and lending out that money in the form of loans. And so what banks have to pay special attention to is the stability of their deposit base, the source of their funding. We saw some disruption in the source of funding for banks during the Silicon Valley bank crisis, and that kind of raised our alert system a little bit. We got to be paying attention to how stable our deposit base is. And then, of course, they make loans, and they're just trying to manage the mismatch in the duration of long-lived assets and short duration liabilities. And so, they care about what the credit risk environment looks like. And so the intersection of the macroeconomy with the banking world is all about the health of the borrower, the health of the consumer, and the health of the corporation as we think about credit risk. So, some of the big themes I think we're paying attention to as the macro environment impacts employees and how stable their paychecks are, and what that's going to do for the demand for credit and the credit worthiness of the loans that are already outstanding. So that's on the consumer side, and on the corporate side, we're paying close attention to what AI is doing to the workforce, whether it's going to augment what workers are doing or displace workers. So that's, I'd say, a really big macro theme running through both the macro economy and how banks are going to operate going forward.
So we'll take the consumer, for instance. The consumer right now is being impacted by the price of things, and yet they're spending almost like they were before. And we've seen that, credit levels are going up and all that. Does that bother you at all, or does that concern you at all about the use of credit to spend every day?
Levels are increasing? Yeah. No, I mean, over 70% of GDP, U.S. GDP, is consumer spending.
Right.
So when you talk about how the macro economy is doing in the United States, you're talking about how the consumers are faring, and they are under some pressure right now. Gas prices are high. Employment, there's kind of some jitters about the employment market, and the way that they fund those gaps in the interim is through the use of credit. And so it is important to pay attention to how consumers are performing on some key credit metrics like debt to income ratios, what their leverage is generally. I still think the consumer's in pretty good shape. The one thing the consumer continues to do is be resilient.
Despite being
concerned, yeah. So we hope that the labor market holds strong and that energy prices will come down. So I agree with you. It's a source of concern that consumers continue to have high debt amounts. But the thing that matters a little more, the research has shown that the thing that matters a little more than absolute debt amounts is their ability to make payments. So as long as consumers can service those debts, they generally fare okay. But they are under a lot of pressure right now because of.
So there's very few conversations that go on in this event that don't involve AI somewhere.
Sure.
Right now, financial institutions, at least from the research we've done, seem to be spending a lot of time on back office efficiencies on the deployment of AI, which obviously makes all the numbers in the banking world look pretty good.
Yeah, sure.
What do you see as the midterm and longer term impact of AI in banking as it relates to their economic well-being, as well as the ability to compete against other organizations in the marketplace that people can invest in?
Yeah, that's a great question, isn't it? So I see AI playing out in two important ways. The first is increasing the efficiency of each employee. So the cost of delivering the banking services should probably go down as we engage in this new dual workforce, right? Where employees work with AI agents to increase efficiency. So that's one thing that will happen on the cost of producing banking services. On the other hand, as costs lower across the board for banks, I think banking services will be more competitive. Also, AI will produce information for consumers that will allow consumers to kind of operate more, to force banks to be more competitive, right? Because as consumers have more information about competitors' rates and competitors' credit policies, for example, and services that they provide, they would shop more aggressively. And so I think the banking space becomes more competitive at the same time that banks are able to deliver their services at a more efficient cost.
And one last question. I've been to a lot of events this year,
Yeah.
and most of the events I've been at, we find the people that are suppliers to the banking industry, such as nCino, find it that the decision process right now is a little slower than it used to be, maybe because of concern about the economy, concern about the geopolitical pressures, and really not being sure of all that noise you hear on a daily basis. What should they do next? Are we going to be getting beyond that noise, and our organizations, because of the speed of change, going to end up making these changes more rapidly now because they're really being pushed by both ends? On one hand, they want to be tentative in certain ways, but on the other hand, the marketplace isn't waiting.
Yeah, that's such a great point, isn't it? One thing that happens whenever there's big technological changes in the economy is that the investment required to get up to speed with that new technology is fairly substantial. So your progress feels like your progress slows down a little bit as you make the investment in the new technology. So in the short run, you experience some pain, but in the long run, when those efficiency gains come to bear, you really do feel like you gain in the long run. So the short run pain, long run gain. I think that's what we're seeing right now with AI is the velocity with which AI is encapsulating the banking world is forcing everyone to make investments in AI that can feel disruptive, and you experience some short-term pain. But I think in the long run, it'll increase productivity, and we'll experience the gain from that investment.
And the beauty of it is we now have partnerships that can be made with companies like nCino that weren't possible 5 years ago.
Yeah.
The smallest organization can certainly outpunch their weight above what even the biggest institutions can, because they move. It's a leadership issue as well as a technology issue. If you have the leadership to guide you and you have the technology to support you, the sky's the limit, really.
Yeah, I think that's an important point. Is that if you think about regional and community banks who keep hearing AI, and they know they need to do something with AI, but they don't know exactly what to do.
Yeah.
I think the beauty of what nCino is bringing to the table is the idea that they can outsource that AI productivity to nCino.
Right.
nCino will deliver those agents to them and allow them to make that jump into the AI world much more seamlessly than they would if they had to do it on their own.
And another difference is your clients are pushing you harder.
Yeah, for sure.
As a company that used to be they bought what you gave them.
That's right.
Now you're making what they're asking
right.
for, which
That's
is kind of exciting.
Yeah, that's the way software should be, right? We should be responding to the consumer demand, and that's the way a partnership works. So.
Taylor, thank you very much.
Thank you. It's great to
Thank
be
you
with
very much.
Okay.